Welcome to FOMO Consulting for your daily AMC stock analysis video on Thursday, July 15th. Ladies and gentlemen, did we see the truth or was it false today about a potential rebound, a recovery we shall see in the coming days? And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I appreciate the support. Let's get into the video. Thank you as always to each and every one of you who have liked, shared, commented, and subscribed. It means the absolute world to me. Thank you. Start with a quote. Don't trust everything you see. Even salt looks like sugar. So true, actually. Obviously, today was a fantastic day. After hours has been fantastic. A lot of green, a lot of recovery, it would appear, a lot of price action, certainly a lot of volume today. We'll see what tomorrow brings. It's hard to believe, right? I'll leave it at that. It's just hard to believe. So let's look at the broader market overall. S&P down 14 points, Dow up 53, Nasdaq down 101, Russell down yet again 12 points, which again affects AMC every single day in some capacity. Overall, a lot of the big tech took big hits. Yet again, the paper hand big investors have concerns around growth, right? Go figure. Every day it's a concern about something, inflation or growth or something. So overall, not a terrible day, but certainly the Russell needs to kind of kick it in gear, right? Let's look at crypto. Crypto is down again. Ethereum, Bitcoin, Litecoin, Doge, all down around 3 to 5%, what have you. Overall, just been again very volatile, hard to predict crypto. Some days it pumps, some days it dumps, right? So let's look at IWM today. Obviously, it tracks the Russell ETF, largest holding with AMC at about 9 million shares last check. As you can see, it followed it almost to a T, and obviously that heavy sell-off pressure, which we actually felt in AMC today, around lunchtime or so, early afternoon, you can certainly see where that kind of stalled our overall progress. So the German apes had a bit of a red day. Obviously, they lag in time. 28.49 euros, down 5.32%. I have a sneaky feeling they'll have a green day tomorrow. So let's look at AMC. As you can see, we followed the broader market of the Russell 2000. We closed a fantastic $36 even at $2.58 up for the day, 7.72%, and up quite heavily after hours, up about $3 at one point, currently around $2 or so. Let's see if we can maybe close above 39. It's interesting after hours. We'll see how this holds intraday tomorrow. It'll be very, very interesting to see if we can regain intraday that very, very important level of support that we so needed throughout, the last week or two, around that $37 to $40 range. Let's see if we can climb back on top of that and hold and regain that as support instead of resistance. We shall see how this works out. What I want to show you is year to date, January 1st to year to date, Russell 2000 on top versus AMC on bottom, same time period. What you can probably see is right around the time of the big run up, you can see where the Russell was down at that time and then kind of had a peak and then kind of arced, very similar to what AMC has been doing over the last month and a half. It is currently down. More recently, it's been on a pretty red slide the last couple of weeks along with AMC. It'll be interesting once the Russell actually starts to have kind of a rebound to see what the effect that has on AMC. So let's look at the 15-minute chart over the last month or so, close to, you can see where last time we were hitting that $60 level, $61 level. They have just been walking us down, and more particular, if you look at the MACD at the very bottom, you can see from that time period, it has just been absolutely pounded, oversold, nothing but selling pressure to get us down to where we are. My perspective is you may very well have seen some covering over the last day or two, very controlled, very suppressed, and I'll show you the Ortex data that would lead me to believe that. So if you look, GME again had another rough day, had a strong close though. That was reassuring. Closed at $166.82, down about 0.5% and up after hours, at least at the time of this recording. But as you can see, if you look at the end of the day, they really got going, got started, got into actually overbought territory for the first time, at least today. So overall, I think GME be just fine in the long run. Obviously, it's been beat down very heavily, no different than AMC. Isn't it interesting? I just did a quick search of AMC news. Go figure, there's no AMC news today. At least that's positive. It's all, same old FUD that's been up there over the last 24 to 48 hours. Nothing new that at least Google's posted. So it's interesting to see that no hip hip hurrah articles for AMC, but the minute it's red, you see 10 come out all at the same time. Again, let's look at the longer term. So this is 1 hour chart going back to early June. Obviously, you can clearly see where at this point it would appear they are trying to fill that gap. Talk about OCD, but it looks like now we've filled that gap that during the run up back in early June. So we'll see how we respond and see if this bounces at this point and we found a level of support that we will now find a new run. And as you can see on the 1 hour chart anyway, we were pressed down very, very heavily, very oversold territory yesterday on the RSI. We've started to bounce upwards, which is good, very bullish. We'll see if we can have a follow through day tomorrow. Same thing on the 2 hour chart, found that gap fill. Same thing on the 4 hour chart, found the gap fill right there. Certainly, you can see on the RSI on the 4 hour chart, which is longer term, harder to press the indicators down or up. You can certainly see where we are in very, very oversold territory. Obviously, the MACD has been red for quite some time on the bearish slide that we've all been on and that we know about. But you can see a little bitty curl starting to occur. We'll see if this is actually a real trend reversal that is true or if it's just a false breakout and they get back to their normal business. Again, gap fill, as you can see on the daily chart, longer time frame. As you can see, we are very low on the RSI. We've started a bit of a bounce today. Certainly, MACD is still very bearish at this point. We'll see over the coming days if this can have a true trend reversal. What I want you to look at here is on the daily chart before the big run up. The last time we were around the 200 million volume range, at least in that general time frame, was on that day I had the yellow arrow, and it was about a $2 or so increase day. It certainly was a beginning of heavy volume days after, certainly before the big run up. It'll be interesting to see if tomorrow we get into the 200s, if not 300s. Watch the volume very, very closely, especially pre-market. I would say if we approach before opening bell 4 to 5 million in volume, we should have a very, very volatile day, either up or down. We'll see how it plays out, but the volume obviously has increased substantially over the last 2 days. This is what leads me to believe there's been some covering. Yesterday, this was at 40 days. It is now at 38.7, which would likely mean, obviously, two things. They have covered some of those older positions. Very likely. Also, keep in mind, based on the new Ortex data that's coming out that I'll show you very shortly, that the utilization continues to go up. The shares on loan continues to go up. So there may very well be a lack of shares available, keeping in mind that some of the brokerages have restricted, borrowed shares against AMC, GME, and others. But as you can see, the new FTD data came out and it spiked, obviously, with big run up tons and tons and tons of FTDs, substantial, which would obviously, uh, you know, validate all of our assumptions that they've probably been synthetically shorting this down. Dare I say naked shorting, we shall see, but you may very well have seen today with the volume and yesterday, maybe the clearing up of some of those old FTDs when they were on the threshold list. Who knows at this point? Your guess is as good as mine, but certainly the FTD data that just came out today is certainly very healthy and may help us in the longer term. So again, shares on loan, 102 million, just keeps trickling up. Utilization, as you can see, is 92%. Cost to borrow, about the same, about 1.7%. Short interest did go up just a bit, about 0.5%, 15.89%. And again, we were on SSR, and the fact that they only used or borrowed today 1.34 million short shares, obviously they had an intention probably to do some light covering, which is why they weren't shorting against themselves, but they were suppressing it from a huge run up. Borrowed share, or excuse me, return shares about 933,000. Again, T+2, that's older data, but at the end of the day, they certainly did not short it to the degree that it has been shorted the last several weeks. By any stretch of the imagination, volume was up substantially, 186 million today, up actually quite a bit versus yesterday as well. And again, there's 432 institutional buyers. Yesterday, at least on our 13F filings, 2 more joined the long only team. So that's good to see. Somebody knows something perhaps. So this is where the rubber will meet the road tomorrow. You can certainly see the options data at the $30 strike. A lot of open put interest at the $35 strike. A lot of open put interest. But if you look at the $40 level, you can start to see some equalization on the call side. And then if you look at the $45 strike, there's certainly about 11,000, 12,000 in open interest, not so much on the put side, but 40 may very well be the line of demarcation. It may be the battlefield tomorrow. And the truth is, you may see, if they fight for 40 longs, we may see a little bit of gamma hedging tomorrow, which may further bolster our case. We shall see. It'll be a heck of a battle tomorrow. And the call volume today was up substantially versus the put volume versus yesterday anyway, as you can see. And overall, again, a lot of open interest, again, at that $100 level, the $120 level, and the $145 level on the strike side. Again, we'll see. I'm not expecting that tomorrow, but you never know with AMC stock, right? Let's close with a quote. Where there is data smoke, there is business fire. The FTDs, certainly all of the heavy selling pressure we withstood for weeks on end. Obviously, the broken resistances and the green day today, and especially after hours, them not pinning it or holding it back substantially, certainly makes you believe that tomorrow should be very interesting in the coming days as well. And perhaps we are at a trend reversal and they are doing what they're supposed to do, which is taking care of some of these FTDs and possibly some light covering. We shall see again. So I want to thank you all for watching. Again, I appreciate your support. If you found this video informative and entertaining, please like, share, comment, and most importantly, subscribe to our channel. And I hope your life is full of green candles. I wish you luck tomorrow, and we'll see you soon.